All right, everybody, welcome to Money Chat Now, brought to you by Investor Schooling. Hey, you can take a free class this Thursday night, tonight actually. If you log on right now, go to investorschooling.com. You can take a free class tonight at 7, and you can learn about real estate investing, stock options trading, stock market, anything you ever want to know about money. We're teaching it tonight. Go to investorschooling.com. I am your host, Larry Steinhouse, and today we will be discussing about how the Dow Jones rebounded today with travel stocks leading the way. You know, I'm real happy about that. Once again, I tell you, every single day for the last 6 days, we've been talking about Robinhood stock, and it's a lot of fun to talk about, and we're going to talk about that today. Let's talk a little bit about why GM went down yesterday. I don't know if you remember the earnings report at the end of the day. They did pretty well, but earnings went down, and the GM went down, and we're going to talk about that too. Biden is pushing for 50% of all U.S. sales auto sales to be EVs by 2030. Amazon is delaying employees returning to the office, and Ethereum changes their gas fees. We're also going to have some notable earnings, including Moderna, Viacom, Zillow, and Beyond Meat. Both Zillow and Beyond Meat are announcing after the bell. And of course, we're going to have some of my favorite picks. So let's get into it. Let's get into a little bit about how the Dow rebounded today with travel stocks leading the way. So first of all, the major U.S. equity rose Thursday as energy and travel stocks bounced back ahead of a key labor market report. So tomorrow there's going to be the report on employment and how many people have gotten jobs, and they're thinking that because of that, it's going to be a good report, and they're thinking that, hey, this is why everything rebounded. Now, I also believe that the reasons they rebounded was pretty obvious. Because, look, the travel industry has to start going up again. It just has to. It's the only thing that hasn't recovered fully from the pandemic yet. So that's why we needed to go back up. So the Dow Jones, I think it raised, let's see, it was up about 200 points today. Let's see exactly what it was. It was up 271 points. That's awesome news. So right at the end, it actually took off a little bit more. The Dow was up 271 points, which is fantastic today. So if you remember that today, the initial the jobless claims, unemployment claims came in at 385, and that was in line with expectations. You know, look, the claims data is the last reading before the key July jobs report, which is tomorrow. And that's when we're going to see what really is going on with the economy, what's really going on with jobs. And we talked about this yesterday. Look, it doesn't matter if the jobs are up, it doesn't matter if the jobs are down. Usually when jobs are up, when there's a lot more jobs being filled, or when there's a lot of jobs that need to be filled, that actually causes the stock market to go down. Because although they're extreme opposites, when there's too many jobs filled, that people get the fear of inflation, so the stock market goes down, and the commodities go up like gold. And on the other side, when the jobs market is down, it also goes down because people are out of work, so they need to make money. However, I think tomorrow the jobs report, no matter what it is going to be pretty neutral, and it's going to be pretty ignored by the stock market because everyone has their own little reason for why it's going to go up or why it's going to go down. Why it's going to go up is because, look, there are people finally going back to work because they're not getting their $300 bonuses anymore. And at the same time, if jobs don't go up, they're going to say, well, their jobs didn't go up because people are a little bit scared about the Delta variant. So it's already built in. I don't think anything's major going to happen, but we'll see tomorrow. All right, here we go. Let's talk a little bit about my new favorite stock whatsoever. It's my favorite not because I happen to make 100% on it this week, which was Robinhood stock, but it's my new favorite stock, and the reason it's my new favorite stock is because it's so much fun to watch this. I mean, this is just like watching, it's like watching a horse race. Where your horse is in the lead, and then it's not in the lead, then it's in the lead, then it's not in the lead, then it's in the lead, then it's not in the lead. And Robinhood stock, I mean, wow, I got to see where it finished here because it finished down pretty hard. It finished down almost 20 points from yesterday. Now, I sold mine at 72. I bought it at 36. I sold mine at 72. And I was looking, and I said yesterday, I'm looking to see it go below 50, and I'm going to buy it back. It just so happened also that at this point, options are being sold on it too. So the option market actually opened yesterday, which might have been part of the reason why the run-up yesterday was so good. But what's really happening, the reason it's running down now, is simply because the insiders filed to sell 91 million shares. These are the people who own the company. These are the people who work for the company. These are the people who started the company. Whatever it is, they have all these shares. And if you remember, most of the time they have what's called a lockup period, which means that if you have a stock or if you open up a company, so let's say Investor Schooling goes public. Oh, I can't wait. That'll be so much fun. If it goes public and we have to, Phil and I, my partner Phil and I, we can't sell the shares right away because they think that that's just plain, number one, just plain greedy, and also at the same time they want to make sure you have skin in the game. But Robinhood stock had a unique rule, and we talked about it last week. It had a unique rule saying that you could sell 15% of your shares immediately. Now, I don't know what they were thinking here, but what a great thing they did for their employees, for the owners. 15% of shares right away, they could sell right away. So what do you think happened today? Let me guess. The stock hit 85 yesterday. It closed around 65. And then what do you think happened? Of course, what happened was, hey, they started to file to sell their shares. And that's what's going to happen. Now they're selling their shares. Now, Robinhood is an insane stock. And it's funny, many reports from experts are saying to stay away from Robinhood stocks. However, I'm going to tell you what I think. I think it's a buying opportunity. I really think Robinhood stock is going to crank over 100. However, be really careful with this stock because this isn't a stock. This is a stock that's being manipulated by the meme stock craze. And as we said yesterday, it's the craziest meme stock because it's the meme stock platform that people were trading meme stocks on. So now you have the meme stock platform becoming a meme stock, which is phenomenal because what do you think is going to happen? Everybody who holds that Robinhood app is going, wow, maybe I should invest in Robinhood, maybe I should invest in Robinhood, maybe I should invest in Robinhood. And that's what they're doing. So this is going to be a super fast, highly volatile stock that's going to swing really fast. In fact, I'm going to say that it closed down 20 points today. I'm just going to throw this out there, and it means nothing, but I say it's going to hit 45 tomorrow and finish 60. Anybody want to write that down and call me up and let me know that I hit that? It's going to go down to 45 and finish at 60 tomorrow. Just for fun. Nothing major, no proof, just for fun, all right? So that's why it's happening, and that's why I like Robinhood stock. The options, I will tell you, just so you know, the options are way too expensive. Way too expensive. All right, we're going to take a break, and we're going to come back, and we're going to talk a little bit about some other great topics. We'll see you in a minute.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start. Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
Welcome back to Money Chat Now. I am your host, Larry Steinhouse, and we are brought to you by Investor Schooling. And of course, you can take a free class tonight if you want to, or next Thursday. Go to investorschooling.com, and you can find out more about that as well. So far we've been discussing how the Dow Jones had rebounded, how Robinhood stock is back in the news, dropping almost 20 points today. Woohoo! Wow. And let's talk a little bit about why GM stock went down yesterday. So GM stock, first of all, GM stock did really, really well. The earnings report came in. Their EPS was at $1.97, was earning per share $1.97, and it beat the Wall Street's estimate of $1.34. So you're like, wait a minute, how come they didn't make money? That doesn't even make any sense. Plus, last quarter, they recorded a loss of 50 cents. So they went from a loss of 50 cents last quarter to a $1.97. I mean, that's incredible numbers. These are numbers that should make stocks take off. Right? However, what happened basically was the guidance wasn't that great. Now, I tried to look it up and I tried to understand what they meant by the guidance being that great. However, here's the best conclusion I can come up with. And they're basically saying because Biden, and we're going to talk about Biden in a minute, well, let's just go right into it. Biden is pushing for 50% of all U.S. auto sales to be EV, electric vehicles, by 2030. And believe it or not, that's what made GM stock go down. What made GM stock go down was the President of GM said, hey, listen, we're not so sure we can make that quota. So what? Who cares? Why would the stock go down? First of all, I'm sorry, that's 9 years from now, and that number's going to change, and there's probably going to be another president, hopefully, another president 3 or 4 years from now, right? And maybe that president won't be as a green president, and maybe the timeline will change. Who cares? So it's okay if they need to ramp up for EV. EV is a great idea. I like it, but it doesn't matter if they don't meet their quota at 50% of all sales. It's fine. We're doing a great job with EV right now, and I don't know, whatever. It is what it is. So just so you know, Biden said, again, we said it, Biden is pushing 50% of all U.S. auto sales to be EV by 2030. I just want you to know where we are right now. We're at 2% of all auto sales. So if we're at 2% of all auto sales now being EV, and we got to go to we have to go to 50%, that's quite a challenge for every company out there. So just keep that in mind. And of course, Tesla is still leading the pack. Biden spoke today, and he invited all the presidents of the 4 big automakers, and I will tell you that Elon Musk did not attend. Now, the speculation was, well, I don't know if Elon really likes Biden. Some of the things Elon does is kind of very Republican-like, but Elon, we don't really know where he stands. But I will tell you that they were talking about unions, and because Tesla is not a union shop, I think he felt it was best for him not to go. So that was pretty much why he didn't go. But if you take a look at Tesla stock, you can easily see that, hey, look, Tesla's like, it's a great stock, but it's kind of boring now. It's not doing what it was doing, months ago, where it's jumping up and down 200, 300 points. I think Tesla's a good long-term play. I don't think it's a great stock option play. I just think it's a play that you're just going to sit on and be fine. All right. Let's talk about Amazon, and Amazon delaying their employees returning to their offices. Here we go again, my favorite topic, the Delta variant. I'm not even going to call it COVID anymore. Let's just call it the Delta variant. And, Delta stands for, there's one side of the political party that Delta stands for. But anyway, the Delta variant is controlling everyone's life again. So here we go. So Amazon said Thursday that it's postponing a return to the office for its corporate employees until January of 2022. Previously, Amazon said it expected most of the employees to begin returning regularly to the office the week of September 7th of this year. Several companies have adjusted their return to work plans amid the rise in COVID-19 cases due to the highly contagious Delta variant. Bah, bah, bah. Now look, okay, just so you know, I don't want anybody getting sick. I don't want anybody dying. But at the same time, relax. It's okay. But I'm going to go back and I'm going to read into this because I like to read into every single news article and actually talk about the reality. I would bet that the people at Amazon are trying to decide whether they should keep people at home or not, so work at home, not because of the Delta variant, but because whether they need to buy buildings and actually house their people. So if we continue this at-home test, this at-home working at-home test for Amazon, Amazon can say, hey, listen, everybody stay at home. You guys are all productive. Stay at home. It'll be easier for them to get employees. They won't have to pay for transfers if somebody has to move from California to New York anymore. This is a great play for these major companies, and they have the excuse to do it. It's great. Think about that. Think about if you have a company right now and you want people working at home are saying, hey, listen, I really want to stay at home. People have children. They don't have to, I guess they still have to have a nanny possibly to watch the children while they're working. But at the same time, they can walk out of the room. They don't have to be at their desk all the time. I don't know about you, but even I run 5 companies, and I sit here and there are times I'm doing this and I have nothing to do, and I'm running 5 companies out of the same office. So people at home, at least they get a chance to relax and they get a little bit more fun. So that's what I believe. I believe that's what's really behind this, but only time will tell. You'll know in December or January what they decide to do, and maybe we'll even have that conversation then. All right, let me talk about something that I don't usually talk about, which is Ethereum. So basically, as you guys know, I'm not a big fan of crypto. And I keep saying that, and maybe I should even stop saying it at this point, because I find I find crypto to be fascinating at this point. I don't really understand it, and that's one of my biggest problems is I don't understand it. So every time I say to someone, hey, why are you investing in crypto? They go, oh, you don't understand, you don't understand, you don't understand. I have a friend of mine who is going to create an incredible Bitcoin mining system. It's going to be an incredible mining system. So you can imagine how cool that is going to be. But I can't really disclose that at the moment. But it's just amazing to me. But here's what's happening. So Ethereum changed their gas fees. Now, in case you don't know what gas fees are, gas fees is basically the fees that they charge if you do a Ethereum transaction. So if you buy Ethereum with cash, or if you use Ethereum to buy something, or if you use something else, something else in the blockchain that Ethereum is involved in. So Ethereum is not only a cryptocurrency, but it's also a company that trades other cryptocurrencies or other things, I should say, along the blockchain. Not only cryptocurrencies, it could be many other things too. Imagine buying a house in the future, and your house buying purchase is on the blockchain, and you won't have to do title reports the way you do title reports now to become blockchain reports. Also, there will be no more title fraud. It's actually a really cool idea in the future, blockchain, but we'll get into blockchain another time. But here's what's going to happen. So basically, Ethereum's London, they're calling it the London hard fork, is just activated. It's a major change. This change alters the way the transaction fees are calculated, ideally smoothing them out and making them less volatile. So basically what this is doing now is it's making it harder, believe it or not, it's making it harder for miners to earn money and could eventually make mining irrelevant. I think making mining irrelevant is a big mistake, so I hope they don't do that because the miners are the ones who are, they're kind of benefiting from this, and I believe they're actually driving the price up. But I think that's pretty far in the future. Now Ethereum is up right now. Ethereum today was up, it's up a little bit. It's up about 2,800 to 2,800, I think it was, somewhere today, and that's great to see it because I have some and I really want it to go up. All right, so here we go. So that's basically what's going to happen is the mining is going to change. And I personally think that right now, because whenever Ethereum's in the news, Ethereum goes up. Whenever Ethereum is not in the news, Ethereum goes down. All right, and that's basically why I think it's kind of not a big deal, but it is going to happen. All right, we're going to talk a little bit about, we're going to come back in a few minutes. We're going to go to a thing. But before I go to this, I want to talk about this again. We talked about this yesterday at Investor Schooling. We are on the radio, Phil Valcone, my partner and I, at Investor Schooling, we are on the radio. And last week, we decided to give Phil's Z4 BMW away. And if you'd like to enter that contest to give, let's do that one more time. To win Phil's car, go to winphilscar.com. Check it out here, and you'll find out more.
Hey, if you were listening to Investor Schooling Live today, I'm Phil Falcone, and I made the decision today on air that I'm going to be giving away this car. You want to take a look at it? Let's do it. How would you like to pop your top without ever getting out of the car? Huh? It's pretty cool. You can do it at a red light. You can do it when you see it rainy. You can actually even do it when you're driving, as long as you don't go maybe faster than 10 miles an hour. So I am giving away this car. Why? Is it because I'm crazy? Is it because I'm rich? Is it because of both? Take your pick. I don't care. Let me tell you about the car. We're going to have a contest. We're looking for real estate investors to go to our website and give us a real estate tip. And you can have people that you know vote on the site about which real estate tip is the most quality, most valuable to them. So let's just say that our contest is going to be looking for quality real estate tips and for votes. So you need to get your friends, your family, people who care about you, and real estate investors who are willing to go on the site and vote for it. And I will give you this car.
All right, welcome back to Money Chat Now. I am your host, Larry Steinhouse. Hey, did you win Phil's car yet? If you didn't, you should enter. That's pretty cool. All right, I want to talk about some notable earnings. By the way, over 650 companies reported earnings today. So if you have the next, I don't know, the next 3 days, I'll discuss all of them. No, I actually won't. I'm going to talk about one in particular, which is Moderna, mRNA. Moderna is the symbol. And Moderna, of course, they have this thing. It's some kind of drug or something that combats some kind of, I don't know, some kind of virus that's going around. And oh yeah, it's the COVID vaccine. And of course, I find it fascinating. So first of all, let's talk about this, right? The projection was $5.96 per share, and they actually beat it, and they beat it $6.46 a share. So this morning, Moderna runs up. It runs up to $4.40, and all of a sudden, it tanks. So why did it tank? The obvious reason is profit sharing. I mean, people were playing this thing, and they're like, "Wow! I mean, this thing ran up, whatever, 25 points in the beginning of the day. Let's take our money and run." And that's exactly what happened. That's not why. The only reason the stock went down today is to take their money and run. Moderna is a good play, but I would not play it right now. I would wait. Matter of fact, I would like to see it. If I can see it, I'd like to see it even. I don't know, maybe even in low threes. Like when I say low threes, below 3.25, if that happens, and then watch for the run up. This happened to me a few months ago with Zoom. I missed this one, where Zoom shot down below 300, and now it's back to 400 again, and I missed it. And that would have been a great play for me in the future, or future after that. So, of course, you want to know one thing. Here you go. In Arkansas, we are seeing the third worst COVID outbreak in the country based on new cases per capita, and vaccines have tripled. So that's a good thing for Moderna as well. Mississippi experiencing the fourth worst outbreak in the country, so a 178% increase by August 4th in the first doses administered. So basically what's happening is people are starting to get vaccines again, which I believe is going to make Moderna go up, but I think it's going to go down before it goes up. All right, let's talk about Viacom real quick. Viacom streaming revenue almost doubled. Now, if you're a fan of Viacom, if you're a fan of Paramount Plus, I'm actually a subscriber to Paramount Plus. I'm a big fan of some of the shows on that, so I watch them. For very little TV I watch, which is very little, if I watch 2 shows on any streaming service, that's a lot for me. So I do happen to watch 2 shows on Paramount Plus. All right, and they added 6.5 million subscribers. And that's what basically why Viacom is, doing so well right now. Let's talk about Zillow. Let's go to Zillow. Now, Zillow, I don't know if they reported their earnings yet. We know it's coming, but I don't have the report. But Zillow is down right now. After market, it's down 4.5 points. Zillow is going to take over the world of realtors. So the realtors that made them who they are, they're basically going to put them all out of business. It's not going to happen tomorrow, but Zillow will become the Uber or the Airbnb of realtors. Watch it. It's going to happen. I'm sorry to say it for you, my fellow realtors out there. This is what's going to happen. It's going to make life bad for you. So it is what it is. That's life. You need to zig and zag and maybe do some special things for your clients so that doesn't happen. All right, I want to talk about my picks real quick. We got a couple of minutes. I still say Alibaba is a buy. It is a great play, Alibaba in the future. If you're in the stocks, buy it now. If you're a stock trader, let it drop another 5 points and see if we get it below 195. I've got it actually on my board. It says buy it at 195. I'm good. AAL, I'm in today. It did very well. It was up over $1.50 for a while. Apple is a play. I like Apple. I'd like to see it drop a little bit, but it doesn't seem like it's going to. So if you want to get in a little bit now, get in now. Just play it out long if you're playing the stock option. CCL, RCL, and of course, Robinhood, if it goes below 50, would be one of my plays. Oh, and a side note, Apple's dividend is tomorrow, so you might see some movement in Apple. All right, tomorrow we'll be discussing some more notable earnings, possibly even Berkshire Hathaway. We'll be talking about some trends in the stock market and all the news relative to making more money. I want to thank you again for watching Money Chat Now. And of course, from time to time, I own some of the assets and options discussed in this show. The opinions discussed in this show are solely mine, and no one has asked me to discuss them. Thanks for watching Money Chat Now. We look forward to your continued support. Please, please, please like and share and tune in tomorrow. Take care, everybody.